So in Australia, there's two main ways of doing property finance. So one is going through the banks, and one is going through private lenders or non-banks. So the banks are always going to give the highest LVR and the lowest cost of money, and the reason is because they get their funds from the RBA, so it's essentially free. On the other hand, they are very difficult to deal with, and they're very focused on serviceability, so how much money you make and whether you can pay back the loan that they give you out of your cash flows. Privates, on the other hand, are much faster. They're only focused on the value of the asset, so they don't care about things like serviceability, but they give lower LVRs and a higher expense, a higher interest rate. So as an example, a bank would typically, for a construction project, they might give something like 5 to 6% interest rate, whereas a private would be looking at something more like 7 to 10%. Equally, a bank would give maybe an 80% LVR, and the privates will usually only do 65 or 70%. So it's a little bit different, but again, the privates are much, much faster. So it depends on, it's kind of a pick your poison situation. Higher LVRs and lower rates, but much longer process and much more difficult money to get, go through the banks. If you just want them to focus on the asset value, you want to move faster, have people who are easier to deal with, but have a lower LVR and a higher interest rate, go through the privates or the non-bank lenders.